All right, good morning again, everyone. Let's get this show on the road. Just add in some persons and then we'll begin. All right, so we're starting with the daily charts as usual. Looking back at what we had yesterday here, we wanted to see a big day, a big up day from DXY. We got that. We wanted to see trade through previous day's high. We got that. So now, very much bullish, looking for 106, 107 run. But first, we want to see where is it likely to retrace to on a lower time frame. So we're going to take this portion of the daily chart and zoom into it to find where would we no longer be bullish. So the idea is being bullish is there, full stop, because we wanted a trade through here and we got that. So now we want to see what invalidates this idea. For that, I'm going to go and look inside the opening price of this candle up to where we are now. And in that range, I'm going to look for a bullish confirmation point. And if price closes below that, game over. I don't think it's going to go down there, but just to frame the idea so that if you're studying any other charts, you could do this without me. So we'll get there in a sec. DXY daily, not DXY, NAS daily chart. Looking good as well. Ultimately, I believe this is the objective. I believe that's the objective. Today is Wednesday. Are we going to get another Tuesday low of the week and then rally? It's possible, but the news will dictate that for us today. As far as anticipations go for NAS, this price action inside here is a little bit indecisive. Indecisive in the sense that we've already traded through this high. We've traded above this high. We've traded to this up candle all the way over here, but it's not giving us any sustained displacement higher. So just looking at the opening price of this down candle, this up candle to the wick right here, that's where price is currently playing around inside. So from a technical standpoint, we simply need more information. We need to see a displacement, simply that. From a fundamental standpoint, we're in August. It's summer. Volume usually decreases. Moves tend to take a while to play out, and they tend to chop around a lot. That's why nobody likes August, because you're in the trade, then it moves, you go break even, it stops you out. Or you're in the trade, it moves, you don't move your stop because you're managing the trade, and then it comes and stop you out still. So August tends to chop around a lot, and most peers are bearish in August. So I still like the idea of getting down inside here. I'd like maybe Wednesday, today getting down here, and then Thursday can scream. If Wednesday goes through previous day's high, then I cancel the entire idea. I don't think we need to go to previous day's high if we're going to go down here. So taking previous day's highs means the bullish confirmation is correct, but getting this really, really cheap price may be off the board. But we look at that as we progress throughout the call. AU, yesterday we talked about AU retracement, very much needed. This fractal looks a little bit like a Persian revert, where this is the highest up close candle that trades through the highs. We traded below it. So now retracement here and lower makes sense, but I expected AU to consolidate inside this range. The fact that it's creating a relatively equal highs right below this gap is suggesting for me that they're going to create engineered highs in here, drop the market, and then sell from above these highs. That's what I'm thinking. So I'm in no rush to take a trade. And I'm sticking to what the daily ranges are showing. This was a huge stop point. We're below here again. Now it's running back inside the range. Everything here makes sense for retracement low, but still not time to see the market move yet. So this is just preparation. We'll drop to H1 shortly. Oh yeah, I'm gonna look at S&P, E-mini, and gold daily today, as I promised. GJ, we talked about this yesterday, and we mentioned FEG here on GJ that needs to happen. I'm okay with today closing as a bullish day, and then we die for the rest of the week, because this would catch up with my bullish DXY bias. Once the retracement is completed, this can start following, and then we could see a really big move downwards. GU, okay. All right, let me pull up gold first on a daily chart. And GU and S&P 500. And that should be it. I added oil to my list because someone was looking at oil. EU buys this morning and sells. EU buys. Yeah, I think EU is retracing. We talked about EU yesterday, and we'll talk about it when we get to the hourly charts. But for the culture, so let me just clean these up. Add some folks and daily chart. Naked gold. Naked. All right, so let's get the gold first. Gold daily chart, currently have it trading up inside this daily fair value gap right here. Wait, what did I press there? It's something wrong here. Okay, cool. So we currently have gold trading inside this FEG. We traded up, and this was the day right here that we traded up into the FEG. So I'm looking at that day as being more than likely the day to set the tone for the market. So let me just put a red line here. I'm looking at this as being the next gold daily order block, and I don't want to see gold trading above, what's its price, the high on that candle, 1775.3. If it trades back to this high and it doesn't close above it, I'm fine with that, because that supports the idea that we're selling off from the FVG again. So under normal circumstances, if we just had an up candle here that I'd expect to be a daily order block, I wouldn't want to see price trade back to that high. But in this setup right here, we have the exact high of the candle being just above the daily fair value gap. So we can see the sell-off on gold start here. So the high of the day could be at this red line, and then it crashes. If at 10 a.m., so in the next 2 hours, roughly the next 2 hours, we have sustained move above this, then I'm not liking that for gold shorts. But I want gold shorts to target here, and we could see animated moves lower. But I'm not bullish gold right now. Not bullish gold at all. So when we get to the hourly chart, again, we look at that. GU, I think GU is retracing inside its order block here. So I'm liking that. We'd have to refine again at a hourly chart to see a clearer view of the price action. But for right now, I'm liking more shorts after this retracement. S&P 500. This is a little bit tricky because if you look at this structure here, this portion and what's forming right here, it looks almost exactly like this. Traded through this high, closed above the fair value gap, consolidated, and now it's doing madness. This is doing the same thing now. So we have that fair value gap right there. We've traded above it. We came at down. It's a down day. Pretty much the same thing as here. We didn't get a down day. We got sustained down days. So for right now, the low of this candle, if we trade through this candle again, the low, then this is driving low. Full stop. If we, this is an imbalance inside here. Closing price to the opening price inside here. I'll watch this level when we get to all the chart. Matter of fact, let's do that now. I'm looking at right here. This is a daily high. Let's just check. That was rated right here. Then we came back down. Then you have an aggressive move up that was erased immediately. This is telling me that this is manipulation and I can ignore this portion of price action and just pay attention to this candle. So that's what I'm doing. I'm looking for S&P to trade back inside that hourly order block. And then I'd like to see a rundown inside this fair value gap. But I don't like using this chart. I like the other chart with the all is because it's got the lines. You know what they say about the lines. When price see the lines, price turns around. This for, I'm gonna use this low. These are relatively equal lows, but since liquidity was resting here. This for EU is standing out. It's standing out for me just as much as this fair value gap is standing out. So I'm looking at this range, which is relatively large, only about 200 points. I'm looking at this range as where EU is likely to play with. If DXY is really bearish, then it could get a deeper sweep inside this low, and I'm fine with that. When that happens, I'll start looking for this high. But for right now, I don't have a bearish bias on DXY, so I'm not looking for EU trading beyond this candle. This is what I'm looking at to be the next bearish daily order block to push price lower. Do I use IPTA data range or something? I don't. I understand the idea. Well, I don't think I understand the idea because I'm ICT charter, but I don't like it. Nothing against it. Pretty sure it works. Pretty sure everybody that uses it will say good things about it. But for my model, I don't need it. So if I don't need it, incorporating it is just extraneous. So I'm gonna stick to that. Just hopping over to the H1 charts, but MT4 decides to not. Okay, here we are. So back to DXY. Yesterday, we're talking about the fact that we didn't want to see DXY trade below this candle again. This is hourly order block. Might not look like it. Any view on oil? If we have time after the call, I'll take a look at it. So I'm looking at this as a daily order block, as an hourly order block. So we created an hourly order block below the opening price of the week. Then we traded through the opening price and through previous day. This has to be relevant. So if news either today, tomorrow, or Friday creates any kind of run low, my focus will remain here. I remain bullish DXY until we close below this. Failing to close below this, I remain bullish. I see no reason to retrace here, but again, you know how news can get. So quick way to interpret the price action here is to look at that range. Take a look at that range and keep your focus here. Whatever time frame you want to use, just frame it on an hourly and then maybe drop to a lower time frame if you want. And just focus here. Premium discount of the range is right there. So a sweep below here is fine. We have the weekly open coinciding with discount as well. Then running higher, I'm good with that. Anything that stays above this up candle as a retracement in here is fine and allowed. Did you catch the highest sell on NAS yesterday? I think I did. I caught a small sell this morning playing around. One of the lowest low dealing range. When you're framing a range, it's all about where the impulse starts. If you're framing a dealing range, it's all about where the stop one starts. This ran below previous candle's low. So I could be dead wrong for thinking this, but when I interpret it like this and I do my analysis like this, it's easier for me to make a decision to validate an idea or invalidate the idea. This is too much range. This is where the impulse started. This is where the order block was created. That's the push. I keep my focus there. Trading through here, I love that. 107, I love that even more. So if news does this, just watch there. If we fail to get back down here, I'm fine. We are creating relatively equal lows just above the opening price of the week, which makes me think that this sweep should be allowed. What is a reclaimed order block? What's this? You're trying to set me up? Kidding. August 22, ICT releases core content to YouTube. Don't blow your account before then. Should be fine. NAS. So looking at NAS, we have two relatively equal days here. Dealing range again, takes high, takes buy side. Dealing range is a swing that takes buy side and sell side. That's fine, that's fine. It's recorded, guys, so you could rewatch. Take a look at this structure here, and I think it was the same on maybe S&P. We had a high that ran this high, then a run up that not all of it got erased, but basically the bulk of it got erased. This don't make sense. If we run buy side here and price trades through sell side here, from this high to this low, sets up a dealing range. Taking here and taking here. This is a bearish dealing range in my opinion, which means bearish order blocks inside here should support price and push it low. So my focus again goes to that up candle right here. So this retracement, perfectly fine. We have 13,000 sitting just somewhere here. Let me just tag that. So I have 13,000, big figure, order block. I'm looking for sell-offs here, but I still need to see what it's doing. Because the fact that most things are waiting for DXY retracement, this could either chop around. Just look at the weekly opening price. See, we're just back and forth around the weekly opening price. This is accumulating for something. My bullish bias on DXY is having me lean towards lower prices. So I'll stick to that unless the idea gets invalidated. Gold doing magic. We're getting into gold next. So these lows, this imbalance is my focus, and I don't want to see them violate this up candle. So if I'm trading today, and I'm likely to be trading today, I'll be looking at structures inside here and seeing if we get a reaction at the time of day when indices come alive. I'm predominantly trading M5. M1 is just to refine the risk where possible. You don't always get a chance to refine your stop loss. If you try to do that too much, you will get stopped out of the move and then it goes. Big mistake most persons make is if you look at the hourly chart and you frame all of this as a order block, then you go inside the order block, listen carefully. You frame this as the order block, you go inside the order block, you can clearly see imbalance levels inside that needs to get rebalanced, but you still mark out a random point and try to sell with your stop loss inside the order block. Price wicks you out on H1, then H1 dies. And then you say you're frustrated and you're going to quit trading. It's not that easy. You have to look at where you consider yourself wrong. If that means you need to cut your lot size and put your stop loss out here, then cut your lot size and put your stop loss out there. Or you wait for a better entry. But entering in an area and then putting your stop loss in an area where it's very logical for the market to trade there is the main reason why most persons not even fail, because their analysis is proper. It's just that you lose the trade because of that. And you know that you've done it before, because we all have. So my connection is cutting out. I guess I'm not supposed to do this call then, since everything happens for a reason. Kidding. So yesterday we talked about this on gold. You'll remember from the call yesterday, there's a specific order of delivery we wanted. We wanted close below this first, taking this second, and then retracing. Okay, all right, cool, awesome. So now we've got the close below here, nice. We've got the run below here. So now we mentioned that this was where we'd be stalking entries. We thought it would happen yesterday, it didn't. So now that's the focus for today. Out of curiosity, I want to know how far or how wide that range is for the order block, so I can decide if it's worth 70 points for a stop loss. Madness. I'm not doing that. H1 is bias and a range. The daily chart is the most important time frame. This is showing me the daily time frame. If I take purple line, the lines off. Remember, between each of these black lines is a daily chart. So even though I'm on the hourly chart, I can still see that we're trading through previous day's highs. And I can see when previous day's lows is left intact. So nice purge and revert idea here. Sweep down here would be a nice way to play today. But that's where I'll be looking for shorts. I don't use M15, not necessary for me. If you do, fine, but for me, no. That's it. So AU, we talked about AU yesterday. We wanted to see a retracement higher. It's run previous day's low now and accumulating inside here. It would be nice to see them not go below here and run up here first. I'd like that short idea here. That's what I'd like. I don't want to buy this. I don't want to buy this. It looks like a nice buy, but I don't want to buy it. I'd rather go short. This is not financial advice. I'm not a financial advisor, etc., etc. You know the drill. But yeah, this candle here is where I would watch. Let's see how far away this is. 47 points or pips. So there's an imbalance on DXY right here. We traded into the imbalance here, didn't close above. The retracement that we're talking about for DXY, it can happen right here. It can happen to run higher. If that happens, then that could set up this buy. But overall, my bias is bearish. So buy to sell is a possibility, or it could just be a quick spike based on news. But focus right here. Focus right there. The XYH1 is that trend line liquidity. Trend line liquidity. I'm not sure if you're talking about this. This looks nice for trend line liquidity. All the daily highs here untapped. I like that. Red line higher is what I'd be looking for. EU, yesterday we talked about the fact that EU needs to run below here to set up the potential purge and revert. And then I'd like this idea. This fair value gap, no, looking at the price action, is not really suggesting a whole lot of possibility. But again, it's news and it's summer, so they can wick you out and then they move. I will not short EU below this red line. Full stop. Not. I don't like buys in here either. All right, so take that with a grain of salt. This price action inside here is chopping around. All of these down candles right here is possibly going to be the order block that pushes it higher. This is far for a stop loss. That's 30 points. We're basically at about 50%. So I wouldn't trade EU, but if I was going to trade EU, I run on these lows inside here, tag the order block, then run above here. Could be what news does. If news does here first and then here, I'm not interested. Why? Because I want to see lower prices. If they go higher and then here, I wouldn't be expecting them to go back up. I don't want to see them create a higher low right here to house liquidity, go higher, pair shorts, then crush all of those lows, including these. Yeah. Yeah, these are all trade ideas based on my YouTube model. If you refine them using the model, you'll see your entry points. Yeah, we're getting into M5 soon. GU, talked about this yesterday as well. Let's see what someone's saying in the chat. You're not anticipating that 1 hour FEG. So this is the up candle. This FEG is here. I like trading to this FEG. All right. News today can do that, but the bulk of the analysis is going to be taken around this up candle. I guess so. Yeah. AU cleaner. AU looks cleaner for real, because AU also looks like my model. Ta-da. EU on the other hand is messy. So I don't like EU GU. Now for this guy here, we have what we're expecting yesterday to be the breaker. We didn't want to see price trade above it. Nice, did it. Traded below previous day's low. Retracements are now possible. Back to here is what I'd be interested in. News spikes and then death. Closing above this, walk away. So does that may mean that you will have to wait for price to get here and either trade a lower time frame shift or leave it alone. But don't just sell when it comes back to here. We don't sell levels and buy levels. We look at the delivery around the levels. And if the model forms, then we trade it. the model would be that right there. So we wait. Above this red line is good for GU to push higher. How do you monitor so many pairs at once? Just click the next button right here, and then another up. It doesn't matter because you look at the delivery, or because I look at just the delivery. It's not about a whole lot of fundamentals or anything like that. I'm strictly looking at the price action and approaching it from a rules-based perspective. I want to see this, and then I trade. If I don't see it, I don't trade. If you keep your trading like that, you don't get shaken up the little fluctuations. Entering into the news, it depends on what kind of news it is. I will not enter pre 9:30 because 9:30 will destroy you, but I'll fade a 9:30 move. So if I was looking at longs and 9:30 did this, I'd fade that. I'm okay with fading that. My model, I don't think I should explain the model. I've shared the video too many times. If you've watched the video and you don't understand, then we can talk about it, but the video is there, guys. Part of the work you have to do on your own. EJ, yeah, the Zoom model, that's it. The Zoom model has been shared a million times. GJ, we talked about GJ retracement yesterday. So here we have it. It's pretty much the same idea now. We have price trading above previous day's high and then retracing. This should be where the low of GJ for now before it trades to the high or trades into this imbalance. As far as it relates to being bullish, I don't see any order blocks inside here that would support higher prices. So if it creates one, I'll be okay trading it. But as of right now, there is none. There is no order blocks to trade off. Unless you're going to try to trade this and put your stop all the way down here. UCAD, talked about this yesterday as well. We didn't want to see price trade below here. No, you can see that order block there supporting price. Just real quick and check the XY. All right, doing nothing. So a deeper run inside the order block for UCAD is perfectly fine. Going below the order block though, I don't like that idea. I don't see any reason to. So lower time frame market structure shifts inside here should be fine for a buy, but just wait for the news and remember it's August. So if you have to cut your lot size to keep your account safe, cut your lot size and keep your account safe. But higher, 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 higher. Maybe all the way to this red line up here. This high, this high. What would be the reason to go deeper into an OB in general? Sweep stops. So when you have an order block, lows above the order block, sweeping those lows into the order block, perfectly fine. So the opening price of this candle is 1.28320. The low on this was 1.38220. So this just swept these lows, which is also previous day's lows, and tapped the order block opening price. SPX coming up. This is what? US 30. Let me grab SPX. Bam. Chart window. I need to get rid of this fault. Explain with my eyes. Analysis. SPX. This is the candle that I'm focusing on. Entry not there yet. Not ready yet. I don't see a sell yet. No. I'm saving you the trouble of looking at all those things. GJ. Let it run. Midnight open. Something about this candle and this push makes me feel like this low is enough. If we sweep this low, I want to say that that should be enough. I want to say this should be enough. 8:30 has already passed. I think 9 o'clock, we have news. So no rush to enter any trades in August. If it's not an A+ setup, just let it play without you. Still waiting on my gold shorts at that level there. No setup, no trade. I can't recall where I heard that idea from. See some ones for something. This is Naz. I think this was the, yeah. That's all. This is all that irrelevant price action for me. That price action is all manipulation. Can you buy there? Buy Naz up here in the premium portion of the day to target what? What are you going to target? Buying or selling any pair is fine, but what are you going to target? And if you say this high, then that's wrong. What's time for your Asian range and London range? Interesting question. Asian is 8 p.m. to midnight New York time. London open kill zone, ICT's definition, 2 a.m. to 5 a.m. And for New York, it starts at 7 a.m. But I'm not interested in the New York Judas that forms at 7 a.m. So I wait for 8 a.m. and I trade that. To fill the void, that would be your target. Where would you consider yourself wrong, Daniel? If you buy here to target just that, would you consider yourself wrong? Down here? Because that's a little bit sketchy. If you're willing to take the risk, then shoot, but I'm not interested in that long. I'm not, it doesn't say high probability. There's too many things that could go wrong against me. So if you're willing to take the risk, and go ahead, don't let me discourage you, all right, because I can be wrong. But for my personal comfort, this is not worth the risk for me to buy. I guess we'll probably hop on again after the news. Zoom cuts off in less than a minute, which is fine. We're waiting for that displacement anyway. So until we speak again, enjoy the rest of the day. Like the video if you watch it, guys, so YouTube can suggest it and we grow the. Thank you. Peace out.